Okay, good morning, folks, and welcome to Stock Charts. Today it is the 23rd of May, 5:19 in the a.m. Eastern Standard Time. Let's begin with our members' stock chart request. This is where members submit symbols for me to review on video. Let's begin with the ITA, the iShares U.S. Aerospace and Defense ETF. Interesting in that we are bull flagging out here on a weekly basis. We have a double bottom setup, no clear, decisive breakout yet. We attempted to, but it was rebuffed. We even put in a higher high in April versus the prior high of February, but it failed to hold the breakout. We pulled back and have since rallied back. We are at current trading above the 20-period moving average on a weekly basis. Would I buy it now? No. What is interesting also here is RSI has broken out on a weekly basis, but the week isn't over yet. Will we close positive? That's the key question. That's why I said no, I don't want to buy the ITA quite yet. And what is making me so reluctant about buying the ITA? Simple. Daily chart. On a daily basis, we rallied up to the upper band of resistance, and then yesterday we flashed a bearish key reversal. The implication being is that in all probability we are going lower in the short term. I'm not saying that by Friday 4 p.m. Eastern Standard Time that we can't break out, but right now the probabilities are looking a bit bleak. So I would avoid right now. I wouldn't short it. I would watch it. Stokes are looking good. RSI, higher lows, higher highs. That's all good stuff. Down volume yesterday was low, but recent up volume has been low as well. And that's the problem with the overall market as well, is that while even on the IWM, the Russell 2000, and the IWC, which is the micro caps, we've seen new all-time highs, there's been no volume. I've been warning members about that for the past few days. In fact, yesterday, I even mentioned on Best Stock Charts that we would look to put in an advanced order selling strength on the TNA because I didn't think it was going to hold up. What led me to believe that? Well, you had a resolution of the trade negotiations, by and large. They're not over yet, but by and large, they're over. So you had to sell the news event. So yesterday, the TNA puts you long of the IWM, but it's a leveraged ETF. For those not familiar with the IWM, it is the ETF for the small caps. So yesterday we rallied. Our advanced order was triggered and we booked profits into strength. You don't need to sit in front of your computer, folks. Put in your advanced order. Where do you want to get out at? Or use a trailing stop loss order on a dollar or percentage basis and preserve your profits. And thank God that we did, because the shares rolled over, flashed a bearish reversal bar yesterday. And in fact, not only a bearish key reversal bar, but a bearish engulfing of the prior day's move, implying that we will probably get lower lows. I'm not saying to go shorting the small caps, but a caution flag is definitely on the track. And here's what I've been talking about in terms of volume. Volume has been fairly light of late on a breakout to new all-time highs. That's not exactly what you want to see. The other position where we booked profits yesterday was AllianceBernstein. Why did we get involved in the first place? Well, this was a stock I spoke about on Best Stock Charts. That comes out, the podcast for free members, on the weekend, and for members of the Contrarian Trader, the video audio version, that comes out on Sundays. We were watching it. It was in a tight consolidation. It broke out. We bought it. And yesterday, we sold into strength. Daily chart. Why did we sell? It's because what we were seeing was, besides the fact that the market was beginning to fade, you saw a bit of fade on AllianceBernstein. Not a lot, but on the 21st, a big topping tail. Yesterday, another bit of a topping tail. So in cases like this, when the market begins to fade, first out, best out is my rule. We book profits and we move to the sidelines. Volume has still been pretty good. So I'm not going to be the least bit surprised to see the shares move higher. But if we get a nice orderly pullback, we'll look to get back involved with Alliance Bernstein. The next member stock chart request that we have up is Micron Technologies. This chart is looking really good on a weekly basis. We have higher lows on Stokes, higher lows, and now we're putting in higher highs on RSI. Good price action. Volume action is on track to come in above average. MACD, higher lows. So the weekly chart is looking good, but here is where the rubber meets the road. It's all about price, right? So the question then becomes, and this is what I always pose to members, do we break out to new all-time highs, or do we fail to take out 63.42 being the prior high? The jury is out on that one. So would I be an aggressive buyer of MU right now? No, I would not. Daily chart. Now, on a daily basis, we did break out of a wedge formation. Really right here on the 9th was the time to buy the shares because we've been gapping up ever since. And I believe they reported earnings. And yesterday, you saw a big spike higher on volume. Yeah, we closed off the highs of the day. Stokes are hooking up, RSI is hooking up, so it's looking good. Might we continue to move higher here? Sure, but I would rather see, rather than these ticky-tack, small body candlesticks, I would rather see a pullback and these long-bodied candlesticks. That's conviction. Right now, it's a bit of ticky-tack trade. I'm just not feeling it right now. Unless, of course, we break out above 63.42. We have the SOX rally stronger. We have which is a semiconductor index, and we have the broad-based markets rally as well. So I would show some caution here. Wait for a pullback and wait for a resolution as to what direction the overall markets are going to trade. Let's get to the pre-market activity. First up is the dollar. And we expected a pullback on the dollar, and we got the pullback, but we also expected a rally back because what I always teach members is that stocks, commodities, ETFs, whatever you're trading, cupcakes, it doesn't matter. Rarely do they go straight down. Normally, you get a topping process absent a geopolitical event. So we bottomed out on Tuesday morning. Overnight, we rallied. We rallied through resistance, and what we're looking for now is a resolution. And that resolution will be answered by this. Do we break out or do we break down? The test, again, is always at the top. Here's our trend line. Here's what we're looking for on this 4-hour chart. Do we break out above it? Because if we do, we're going to head up to resistance, which is just above the recent highs on a daily basis. Again, this is a 4-hour chart. Now, you might expect that with the dollar being strong this morning, that gold would be weak. It's not. It's actually up this morning. So that's a good sign. Remember yesterday, I spoke about the higher highs and higher lows on RSI. It continues. And now we have RSI above 50, which is bullish stuff for gold. But what we really need to see before I get all giddy about gold, we need to see it close back above 1300, 1310. Natural gas of late has been in fuego. Here is our lower band of support. Here you have it, a clear and defined support level. And this was brought to my attention by fellow member Anthony. He brought it up as a member stock chart request. And I was definitely cautious about the trade, and this goes back a week or two ago, before the big rally. But now, given the events of the past several days, I'm becoming more and more bullish on nat gas. I discussed the monthly chart last night, the higher level view with members. Members, go check that out on Market Wrap last night. It's posted in the members area. We are down slightly on the morning. Tomorrow we have nat gas inventories report. Let's watch that report. If we get a pullback, that might be an opportunity to build a position. But as it stands right now, nat gas looking good. What we're looking for here on a very, very short-term basis, again, 4-hour chart, is a rally above this upper band of resistance. A really strong chart on a 4-hour basis. Now, taking a look at oil, oil is weakening up here a bit. You could see that we put in a high back on the 17th. We attempted to take out that high on the 22nd and failed. Now that we have a failed breakout, remember what I said earlier, twice already on this commentary, the test is always at the top. Do we break out or do we break down? Right now, it's indecisive. Here is the line in the sand, right here. If we break down below the lows of the 21st, oil is going to go into a short-term correction. Now, if we rally up and above 79.23, we should see a continuation move higher. But right now, oil, for the first time in a while, is a watch to me. So be careful. And here's the run that we've seen on oil. Really nice run, but it's under pressure right now, so just be careful. To the markets, the S&P 500 is under a lot of pressure this morning. We are pressuring the lower band of support. Remember, we had the Federal Reserve minutes coming out later today, and they can move the market. We are down nearly 0.75 of a percentage point on the morning. The Dow futures, they are down over 0.75 of a percentage point, down 192 points, under a lot of pressure. Thank goodness we booked profits yesterday on some of our longs. We made those profits real. You need to make your profits real. The NASDAQ, also under a lot of pressure, and in fact, we are down over a percentage point on the morning. We are leaning into the third standard deviation Bollinger Band. Expect a rally back at some point in time. But we have taken out support here. So members, we're going to be talking about the potential for putting on new short positions if the markets really begin to go into free fall on volume. That's what we're looking for. I don't care about the price action without volume. The 10-year yield, it's moving higher this morning. So you're seeing yields move lower, which is not a big surprise. Why is that? It's because the U.S. bond market, the Treasury market, believe it or not, excuse my voice, is paying the highest yield on their bonds in all the Western world. So it is any wonder why money would leave the EU and rotate into our bond market, pushing yields lower. And with my voice now collapsing, folks, I'm going to leave it off here and just say, if you're not currently a member, sign up for our 14-day free trial offer. If you are watching this on YouTube, subscribe to my channel, leave a comment below, click that bell, get notified of future videos. If you found us through StockTwits, Twitter, Seeking Alpha, follow us there, leave a comment. And if you are watching on the website, enter your email address, We Hate Spam Too. We'll send you out a few trade tutorials. Everybody have a profitable trading day and be well.